Hi, this is Jason, and today's date is the 23rd of May 2021. And the purpose of this video is to go through the stock to flow model, as I believe this month is a pretty pinnacle month for Bitcoin. Bitcoin's come off the back of several successive negative news. So, for instance, the Tesla news, China's ban on Bitcoin for the however many time now, and also taxation news from the US under the Biden administration from the IRS on cryptocurrencies. So, as mentioned, the analysis today will be on the stock to flow model, and this is to bring about some context. So, in terms of definition, the stock to flow essentially shows the total amount of Bitcoin out there relative to the production of Bitcoin per unit time. So, this unit of time can be monthly or it can be yearly. Essentially, what it shows is this ratio, and this ratio increases every 4 years, as we know that every 4 years under the Bitcoin halving cycle, the production of Bitcoin reduces. So therefore, the top number gets bigger relative to the bottom number, owing to a larger and larger ratio, which is what dictates the price, or has been shown to dictate the price. Now, the bar charts here show the price action of Bitcoin, and this is on a log scale, so it's not in terms of absolute price figures, it's on a log basis. And we do have these numbers that represent an indicator called the TD sequential. And what I've done here is split the price action into the 4-year cycles for Bitcoin. So we have the first one ending at the end of 2013, and then the second one ending at the end of 2017, and then the third one here ending at the end of December 2021, i.e. our current window that we're in at the moment. I've also highlighted where the halving occurred. So if we look back, the halving in the first cycle occurred in November 2012. The halving in the second cycle occurred in July 2016. And then the halving, the most recent one, occurred in May 2020. And what we can see is a pattern of rising. So with the halving, when this happens, of course, stock to flow increases instantaneously. So it jumps up, jumps up, jumps up, and that's due to the definition because of the rate of production reducing. So what we see here is stock to flow increase, and then price action responding, and then increasing, and then matching the stock to flow expectation of price. And then after a bit of consolidation, a few months of consolidation, Bitcoin sees this parabolic pump to a blow off top, and then there's a retracement and bear market. In the previous cycle, again, stock to flow jump, price more gradually increasing and responding to stock to flow, but rather than a consolidation, it continues its parabolic run to top out at about 20,000 K, and then a retracement into a bear market. What we see with the current cycle is, again, stock to flow increase, and then price in a similar fashion gradually increasing to match stock to flow. Now, I think May was a very significant, or is still a significant month, because what was expected from my perspective is a parabolic run either this month or next month in June 2021. And now it has gone against the trend, so it's gone below the stock to flow expectation of price. And what might happen is a more similar action to what happened in the first cycle. So as you can see in the 2013 one, there's a bit of consolidation for a good few months and then a parabolic move up. So for Bitcoin, could we see for 2021 a bit of consolidation and then one more pump up to the blow off top and potentially a retracement into a bear market for 2022? Now, what I think is interesting is with each cycle, there's significant support levels or significant price levels illustrated by these dotted lines here, here, and here. And these are formed due to the TD sequential. You can search that up. But essentially, the observation that can be seen is in the first cycle, this dotted line formed around $34. In this cycle, price never touched it at all or never tested it. In the second cycle, this formed at around just below $600. And the subsequent months did test that line, but it never finished below the line. So even though during the month it went below the line, the month never finished below that about $580 mark. In this current cycle, the similar support level is around $29,000, $28,000. And what has happened this month is essentially that was the bottom at some point. There was a period, maybe for a few hours, where we tested that level of $28,000. Now, what I want is that we don't finish May below that. We can touch below it during May, but with the about 7 days a week left of trading, Bitcoin needs to finish above the $29,000 level. If we break below it and end the month below it, I believe that the risk of the bull market ending is pretty high, in my opinion. So we need to finish above it. But what we do see is we do have a good few months to the end of the actual Bitcoin cycle or 4-year cycle. So what would be ideal to happen is some consolidation, as mentioned, around 40 to 50 for the next month and maybe the month after. The longer the consolidation, better the fundamentals, because the faster we go up, the quicker we go down. So if we can consolidate around 40 and 50 the next few months and then have one more parabolic run to end the Bitcoin cycle, that would be ideal.